plus you have equity growth, which grows your net worth. Those are true investors. Those are people who are playing the game correctly. So to your question, is real estate a good investment? Yes, it's a good investment as long as you invest properly and you invest wisely, meaning you're in the right markets where there's strong demand, there's population growth.
I'm your host, Chaz Wilson. I bring you successful entrepreneurs, add valuable wisdom to your journey, and help you succeed. Welcome to Connect, Share, and Prosper.
Hey everybody, welcome to another episode of Connect, Share, Prosper. I'm your host, Chaz Wilson, and I am joined today with someone who might look familiar if you watched his previous episode. I am joined today with Marco Santarelli, who's an investor, author, Inc. 500 or 5000 entrepreneur, and the founder of Norada Real Estate Investments, a nationwide provider of turnkey cash flow investment property. His mission is to help 1 million people create wealth and passive income and put them on the path to financial freedom with real estate. He's also the host of the top-rated podcast, Passive Real Estate Investing. My guest, Marco Santarelli, welcome to Connect, Share, Prosper.
Yes, it's an honor to be back on your show. I'm excited. This is great. So thanks once again.
Man, my pleasure. So, this is kind of when you look at the title of my podcast, Connect, Share, and Prosper. Today, we're really sharing some great wisdom of how people can prosper. And so it fits really well into what we talk about. What I kind of want to hit the elephant in the room right out of the gate here. In this kind of environment, amidst COVID and all the challenges economically, why real estate right now? Is real estate still a good investment?
Well, this is going to sound like a loaded answer, but really, real estate has always been a good investment. And then the question becomes, well, why is that? Because a lot of people have lost their shirts, back in 2006, before the meltdown of the Great Recession. And even historically, there are people who've actually lost a lot of money in real estate as well. But you have to stop and step back and ask the question, well, why did they lose money? A lot of the time, they were either, one, over-leveraged and they didn't have the cash flow to service the debt, meaning they weren't cash flow positive and they had so much property that they really couldn't carry it for a long period of time. It's kind of like, think back to the movie The Big Short, which is one of my favorite movies. He made a bet that the housing market was going to crash, but he had to service the insurance policy that he was buying in order to keep afloat to the point where it actually did crash. And then it was a huge payday. Well, people were doing that with real estate. They were buying all this real estate and watching prices go up in the hopes of one day flipping that property 6 months down the road, 12 months down the road. And a lot of people did this with new construction. And for many people, it paid off. I literally know people who made hundreds of thousands of dollars flipping property that they've never stepped foot in places like Las Vegas and Florida. But they were speculators. They weren't investors. So that's not investing. But when you buy real estate, regardless of where it is, as long as it's a good market and you've got cash flow, which is what I call the glue that holds your deal together, over time your equity grows from amortization. Over time your equity grows from appreciation. And so now it's a good investment because you have an immediate cash-on-cash return, you have cash flow, plus you have equity growth, which grows your net worth. Those are true investors. Those are people who are playing the game correctly. So to your question, is real estate a good investment? Yes, it's a good investment as long as you invest properly and you invest wisely, meaning you're in the right markets where there's strong demand, there's population growth, because we always have a need for housing. The U.S. population has consistently grown. We have this ongoing demand for real estate, and we can't keep up. We literally every year are short in household formations for what demand is out there for real need in housing, both rentals and for homeowners. We just can't keep up. We can't keep up. So yes, real estate is good investment. In fact, it could be argued that it is a great investment, but you've got to do it wisely.
So, and the reason I asked that question, and we talked, you mentioned a lot of words, which I want to just kind of go through. There's people maybe watching this. No, I mean, so these are terms that for a lot of people in the game, they understand those terms. Maybe if you're new listening to this, don't get overwhelmed with maybe not knowing what all of those things mean right now, because there's a better message to this than just going, gosh, I don't know what all that means. That's okay. But what I wanted to just touch on for a second is, and I know it was sort of a loaded question in some ways, and you gave a great answer to it, but the thing is, what I love about real estate is it's one of the two investments. I say a business and real estate are the two businesses that my good friend Ryan Lee and Brad Gibb talk about are the only two that meet all four criteria of the four pillars. However, only if they're done properly. So again, just like a business is a great investment, or it's a huge liability if you don't do it right. Just like real estate, if you don't set it up correctly. So they're great vehicles for investment, but you've got to set them up correctly and work with people that know. Just like in business, a lot of people will hire a coach. In real estate, you should have somebody who's coaching you through that process if you don't know what you're doing. Would you agree with that?
Yeah, 100%. I mean, Robert Kiyosaki calls real estate investing a team sport. You don't do it as an island. You don't do it solo, because you will need other people. You do need an acquisitions person. You do need someone to help you with financing. You do need people to manage your properties, because I don't suggest you manage your properties yourself. Most people don't.
Agreed.
You need your attorney. You need your tax advisor. So it's just like you and your business. You've got your partners, and then you've got a team around you, and then you've got support staff, and you can't do it by yourself. You just can't scale, and you're prone to fail. So what you're talking about in terms of business is totally true. So business and real estate are really the two places where people make their money.
Yeah, and what I love too is what you just said, is it takes a team or a network, which is why I think people listening to this who are part of master networks, assuming several things, but this is why you are perfectly poised and positioned to invest in real estate, because you are building your network, your team, right? So when you have a Master Networks chapter, for those of you listening, and we're going to get into the nitty-gritty of real estate, but I want you to understand right on the onset, you have your real estate agent, your loan officer, your inspector. You're building your team in your chapter. This would be perfect to sort of vet and bring in those people that you want to surround yourself with, so that when it's the right time for you to make the investment, you've built those relationships, and that's so key to part of this. So let's start with that for a second. If I'm listening to this and I think there's people, at least in my conversations, that people say, gosh, I've been hearing I need to invest in real estate for 15 years. I just don't know where to start. And I think that's the problem, is that they hear about it. They actually know it's a smart thing to do, but getting started is such a challenge. Where should they start? What should they do?
Well, the starting doesn't necessarily mean buying a property. Starting means that you invest in yourself. I always say, and it's my first rule of my 10 rules of successful real estate investing, is to educate yourself. That first investment needs to be in yourself and in your mind, because you have to, first of all, have the right mindset. And second, you need to build a certain foundational base amount of knowledge. People make the mistake of taking this to the extreme and thinking that they need to read a lot of books and listen to a lot of podcasts and really build a lot of knowledge and become an expert. No, that is not true. You need to build your financial literacy enough to have intelligent conversations with the people on your team, like we were talking about a few minutes ago.
So good.
So once you know enough to have an intelligent conversation, then you can let your team help you and guide you along, and you'll be able to know if you're going in the right direction, because you've got enough knowledge. People literally procrastinate by thinking that they need to know more than they know. More often than not, they know enough. But if you have the right team, there's 5 key people on your team, but if you have that right team, you will be able to identify the right properties, get them financed, get them professionally managed, and make sure that your taxes and your asset protection are in place. So that's critically important. So that's kind of a half answer to your question.
No, I mean, I get it. You got to have some education, right? Just like you got to know what you're investing in. But to your point, you don't have to know. In fact, you probably won't. Even some of my good friends who are, they invest heavily, massively into real estate. They're picking up 4 to 6 properties a year. Even they are not experts in every aspect of that property, because even sometimes they're in locations they've never been to. And so they're not an expert on that location or the area, and so they rely on others to make those assessments for them in their investing. Okay, so I want to ask you a question. I want to dive just more of a philosophy of yours and get your opinion. This came up on it was not that long ago. I did another podcast with somebody who's in the real estate world, and I asked this question, and we got into this conversation. So I want to pose this to you. Do you think, and I don't even know how I got to this question, it just came out sort of, but do you think that flipping homes, because a lot of people, I mean, I've had Tariq El Moussa on my podcast, who's, has TV shows about flipping homes, and we were talking about flipping, and then, people see this on TV and they see sort of like the begin, the end, the finished product. and yes, there's a dramatic TV show created out of this. And so people sometimes go, but man, that looks easy. I can do that. So we got into this discussion of flipping homes. So the question is, do you think flipping homes is investing? And it came up in a discussion. So I'd love do you think flipping homes is real estate investing?
So I answer this question actually quite frequently, believe it or not. And if I'm not mistaken, we might have actually talked about this in a previous
might have.
recording. Yeah. So the answer for me is black and white and very simple. Flipping houses is not investing. It is a transactional business. The moment you stop flipping houses, your income stream stops. It is a business because you are putting up capital risk and time to do a transaction, which is to buy, fix, and flip that property. Whether you flip it yourself or flip it retail, doesn't matter. The end goal is to generate a chunk of cash. That is your profit. But it's one time and it stops after you're done flipping that property. If you don't find the next property to flip, you're done. You're done your business. The idea is to create streams of cash. That is an investment. When you put $1 in and you get $1.10 back out every year, that's a 10% return. That's an investment, whether it's a CD, a bond, a stock, a piece of real estate, a business that you're investing in passively, not actively. Those are investments. But flipping houses, people are led to believe that's investing. It's not. People just throw that terminology out there like, because it's real estate, it happens to be investing. Well, no, it's not. If you're a home builder and you're building houses and then selling them to homeowners, do you call that investing? It's not. Flipping is the exact same thing as building a builder building a new home. They're one-offs. It's not. It's not investing.
So I had this conversation, and I think we did talk about it on the previous episode, and I've had this conversation a number of times recently, and I used the example of like, someone, let's say, buys a beat up car and they put some money into it and flip it. Would you call that investing? No, it's a business of flipping cars. I mean, that's like, so it's just sometimes the product of real estate makes it feel like, well, I'm an investor. So clearly I hear you're a buy and hold for cash flow kind of guy.
Yeah, I mean, I flipped hundreds of houses. It's a lot of brain damage, but that was a business.
Right.
I had to treat it as a business, and it was rough. And believe me, I didn't make money on every single one of those properties, those deals, those flips. I lost a lot of money. But the goal, like, you got to think beyond what you're doing. I mean, for some people it's a hobby. For some people it's a legitimate business where I know people who are flipping 40 houses a month.
Jeez.
But the thing is that is what they've built as a business. But here's the smart thing. Here's what they're doing. So it doesn't matter what you do in life, as long as you've got positive cash flow at the end of the month that you can save to put towards investing.
Yeah.
What you want to do is you want to flip enough houses where you've built up a war chest or stockpile of cash that you can now take and redeploy and turn that into streams of cash. So you want to make those chunks of cash, whether it's a paycheck or whether it's a business flipping houses, but take that income and shift it over here, take it from active to making it passive income.
So that was going to be the great point here, is that, like, it's not like we're against flipping homes. I've flipped homes as well. It's a great way to create some cash to then invest in the passive. That's where the investment comes in. So really good point on there. Are there big myths in investing in real estate? Because by the way, I love creating business that generates positive cash flow from my business that I then invest in real estate, which generates more cash flow. That's the path. So, but are there myths in the investing of real estate that people get hung up on that really stop them from moving forward, that you hear often, that you have dispelled?
Yeah, probably one of the biggest ones is that you hear this in the media, whether it's a newspaper or on TV. People are always talking about the housing market, and I literally say that in air quotes, the housing market. The thing is there's no such thing as the housing market. They talk about real estate as if the market is one big nebulous blob that covers the entire United States. Yeah. There's no such thing. All real estate is local, and you can argue that all real estate is actually hyper local, because even if you look at a city, let alone a metropolitan statistical area, but if you zoom down even to a city, well, that city is broken down into dozens and dozens, if not hundreds of communities or neighborhoods. And what's happening on the east side of a city is maybe different than what's happening on the west side. I mean, I could literally pull up heat maps right now because I've got some special tools. I mean, you can't see it, but I can actually zoom in beyond zip codes, and I can see areas where property values are appreciating, and in less than 5 miles away, property values are actually depreciating. Now, I don't know why. There must be something going on. It could be crime related, school related, political. It could be, tax related because of zoning laws or whatever. But that's how granular you can get. So the whole concept of a housing market is bogus. There's no such thing. What happens in your city is different than what happens in Southern California here in my little city, which is different than what happens in, let's say, Detroit, Michigan. So you can't just generalize.
Yeah, I mean, that's such a great point. And I remember when, I don't remember, 2009, 10, you had where the Midwest was pretty well flat in appreciation, but you had, which again, if you're listening, you're not sure, appreciation is really when that value of that house goes up from when you've bought it, and that a value appreciates. Well, you had places like Las Vegas and Florida and some others where, I mean, it just dropped. The value of homes just dropped. So to your point, you can't say the housing market was, and now lots of areas it was, but there was definitely parts of the country where it stayed flat and didn't really drop. So yeah, I think that's such a great point. What's probably the top mistake that people make when starting to invest in real estate?
Well, believe it or not, it's actually tied to that first thing the thing we just talked about. A lot of people get into real estate thinking it's all about the deal. The deal is more specifically the property. And they may be looking at a property that was newly renovated. And even if they have an inspection, it checks out quite well. And, there's no problems or deferred maintenance. And that's all well and fine. And even the numbers make sense. I mean, they'll look at either a pro forma or the actual numbers on that property, which are showing what the property is doing today because it's already leased and under management. And we have anywhere from 100 to 200 of those at any given time. But here's the missing piece, and this is where people make the mistake. And I actually made this mistake early on more than once because I just didn't know what I didn't know. And I was basically under operating under the principle of ready, fire, aim, and just buying what I can. And I bought a lot of property in a very short period of time. But in hindsight, looking back, when I actually stepped back and looked at the forest, and not just the trees, which are the deals themselves, the properties, I realized that, oh crap, I just bought some properties on a street that had 3 burned down houses. It was high on crime. Some areas were actually were areas that had squatters all the time. There was always drug deals going on. In fact, one of my properties, I literally had someone shot in front of my property.
Oh, wow.
I don't know what happened to them. I never heard after that. The ambulance just picked them up and, carted them away. But the problem is that to look at a property and evaluate it or underwrite it as an investment without considering the neighborhood that it's in and the market that it's in is a mistake. Because when you can pick markets and then areas and neighborhoods first, and then analyze and underwrite the property, and then consider the broader area as part of that deal, then you will eliminate 70% of your risk. Because you have to consider the area. You can't uproot a property. You can't pick it up and move it to a better neighborhood later because, I just didn't like the neighborhood I bought it. No, it doesn't work that way.
That's why they always say location, 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 right? It's so key. So what parts of the country right now are you seeing people invest in?
Well, I can't speak for every market. The United States is made up of 504 MSAs, and these numbers keep changing, but it's around 504 the last time I checked. 504 metropolitan areas. Those areas can be broken down even into, chunked down into smaller and smaller areas. Like Atlanta is 7 million people. I mean, you've got, 100 cities. So, I even though I do keep track of the 504 markets, I really focus on maybe the top 20 or 30, and the top 25 or so are the markets we operate in, that we have, those turnkey investment properties that clients buy from us. So I can speak about those. But Florida is pretty quote unquote hot. That's an undescriptive word because people define hot in different ways, right? But Florida is actually booming because it has strong population growth and there are jobs. And those are the two key fundamental things that we look for in a market. So Florida markets are doing very well. We're in about 5 or 6 right now. Memphis is a perennial market, so you can do well. We've been in Memphis for 16 years now, selling property. Wow. We've never left the Memphis market because it's just a perennial market. The Alabama markets, the major Alabama markets are good from a cash flow perspective. The greater Chicago metro area is good for both cash flow and price growth. Parts of Pennsylvania are very good for cash flow, but they're showing strong growth as well. Now, you don't always have to have strong growth. Some investors are looking for markets that just give them good cash flow, whereas other investors are looking for markets that have strong appreciation potential, and they're going to have, not exciting or sexy cash flows. So they're putting up with $100 a month true net. Or less, but they're getting huge gains in appreciation, so they're okay with that. That's their strategy.
So what you're saying is, some are saying, I'll take a lower cash flow because the history of that market shows me that the appreciation on the back end will be much greater.
Yes, is the short answer. And it's not just the history. It's actually what is the market doing today.
Right now.
Yeah, what is it actually doing and why, and what's the momentum, but also making an intelligent prediction about the next 12 to 24 months. Real estate is a very slow moving market. It slows down slowly, and it gains momentum slowly. So it doesn't really shift overnight like the stock market.
Right.
So,
right.
It's far more predictable. But yeah, so there's two different types of markets. This is kind of the bigger picture, but you've got markets that are stronger in terms of price growth, and you've got markets that are stronger plays in terms of cash flow. Sometimes you have a hybrid market, which gives you kind of a balance of those two, but they're never in equilibrium. The markets are always shifting, so they're doing one or the other, or they're moving from one to the other. But that's kind of a bigger answer to your question about what markets are investors investing in. The markets I mentioned are the markets that a lot of investors are actually investing in because the numbers make sense. The fundamentals are there. They're markets that we're in for those reasons. So those are some of them.
It's interesting. I had another real estate investor on not that long ago who talked about Alabama, Memphis specifically, St. Louis, a lot of the similar markets. You were talking about Florida, I think they talked about as well. So interesting that you guys are kind of in that same markets, and there's plenty of opportunity in all of those markets. I mean, there's plenty out there. Where can people find you if they want more education on what you're teaching and how they can find properties, et cetera? Where should they go?
Yeah, I probably, like you, am big on education. I think people should, continually educate themselves. And there's so many different ways, whether it be books, podcasts like yours, seminars, webinars, whatever it may be. And a lot of this information is actually free. And if it's not free, it's like $10-20. I mean, how much does it cost to buy a book? So there's no excuse not to educate yourself. But, I'm a big believer in being a perpetual student. I will always be a lifelong student. In fact, it's literally in my calendar, block of time, study,
Yes.
And that's the way I look at it. So, we put out a ton of content. In fact, I think we put out at least one market, a very detailed market overview every week. Plus, so we put a lot of content on our website, and, I do a podcast of 3 episodes a week. It's usually one main episode and then 2 extras. So all that stuff is found on our 2 websites, noradarealestate.com, and the sister website is passiverealestateinvesting.com, which is the same name as the podcast called Passive Real Estate Investing. So that's where you can find me, my team, and everything else.
So so that's where I can get some education. Do you guys offer turnkey properties for sale that people can buy, like they can invest through you?
Yeah, actually, that is our core business, is turnkey rental properties. We're in, as I mentioned before, about 25 markets. So at any given time, there's probably 100 to 150, sometimes 200 properties in the pipeline that are available to investors. Now, some of them are being built, some of them are under renovation, so they're not actually available for purchase today. But we can share them with you, and if you like them, we'll earmark them and reserve them for you. But yeah, we do pretty high volume. We're probably shooting for 800 properties this year, 800
Wow.
sales to investors. So, and these are mostly turnkey rentals. About 80% are turnkey rentals. The other 20% are new construction, single family duplex and fourplex. But that is our core business. The education is all free. The counseling is free. Our resources are all just freely given to you. We vetted them. They're people we work with.
The thing that I've always think is fascinating about that from a business side, and what I think is genius is, if you help somebody, let's say someone called you up or reached out to you and said, hey, I've got, I don't know, whatever, $80,000 I want to go put on a property, $100,000 I want to put on a property, and I would like to find I don't even know what you're seeing right now in some of those markets. Let's say a 10% cash on cash return, 8% cash on cash return. And you find that for me. The genius part of that business is over time, when I generate more cash and revenue, you've already helped me get 8%. I'm coming right back to you to get the next property and the next one and the next one. So I would imagine you have as well as pipeline of investors that continue to come back and invest in property with you.
Yeah, it's pretty rare that an investor buys only one property because that's not going to move the needle all that much, right? You need to build a portfolio. And my rule of thumb is 3 to 5 properties in 3 to 5 markets. So, you may be buying one a year, and some investors have a lot of capital and they can literally acquire 3, 5, 10 per year and build up that portfolio quickly. But it's not about the speed. It's about starting in one market that we help you identify, getting 3 to 5 properties in that one market so you have a good footprint. It's all being managed professionally by one management company there. Then move to another market geographically different, usually in another state, and repeat 3 to 5 properties there. Now you've got a portfolio built in 2 different markets, so you geographically diversified. And now you do that one more time, at least one more time, in a third market, geographically different than the first 2. And now you're at, let's say, 9, 10, 15 properties. Now you've got a pretty damn good portfolio. You can keep going, and many people do, but it doesn't make sense to just buy one.
And is that to balance those market shifts potential? So if I got 3 or 5 in one, or 5 in one, and that market has a hit with jobs or whatever, then the cash flow potentially goes. Is it to sort of balance myself out?
Well, that's exactly what it's for. It's the whole concept of diversification, which a lot of people refer to as diversification. The only reason you diversify with stocks is because you don't know what the heck you're doing.
Right.
You can't control nor predict what stocks and bonds and mutual funds and ETFs are going to do. So you just spread the risk, spread your capital out across a bunch of them. So that way, if you're failing on a few here, hopefully you're going up on a couple others over there. The concept is similar with real estate. If there is a stall in a particular market, this doesn't happen very often. If you choose your markets right, it's pretty rare that you see a situation like Detroit, where you see decades of, population loss because of job loss. In fact, in the last 17 years, I've never seen it in any of the markets that we've been in. It just hasn't happened. But that's the general idea, is to diversify across markets geographically. So if there is a deep recession and there is a market that is affected because of oil, like Houston is an example, when oil prices drop below $40 a barrel, that's a pretty hard impact, because most oil companies and wells are not profitable unless they're above $40 a barrel. But believe it or not, Houston's a very resilient city. Houston didn't skip a beat. You'd think that you would have, property values start to drop because people move out of the city, out of Houston, but that never happened. So Houston just continued to hum along. So if you were an investor in Houston, plus you were an investor in Memphis and all these other markets that we're in, hey, good for you. You still did very well, but that's the concept, is diversification.
So last question here on this for people listening who are, really thinking, gosh, it's time for me to start thinking about and making some moves. When we talk about working with investors, just give them an idea. I'm sure you have some investors who come to you and say, I've got 40,000, 50,000 I want to look to buy a property. And you've got those that say, I've got $500,000 to go invest in property. I would imagine you work with both ends of that spectrum and everyone in between.
Yeah, we work with people who are literally just getting started. It's their first property. We call them a newbie. They've literally just saved $20,000, $25,000, which is more than enough to get them into their first property that's probably like $100,000 3-bedroom 2-bath home in the Midwest somewhere. Perfect. And then we have other people who come to us literally and will say, hey, I've got $1.7 million of investable cash or liquid cash that I need to start, putting into a real estate portfolio. The conversations all start the same way. It's a 1-hour call with our investment counselor. We call it a strategy session. There's no cost, no obligation. It's really just to understand your situation. Where are you? What are you trying to do? Where are you trying to go? Let's reverse engineer that and turn it into a roadmap. Like, let's have a plan. And it could be, a plan where you focus on this type of property in these 3 different markets, starting with this market, building it up, and using conventional financing, and then rolling into conventional or portfolio loans, to go beyond the 10 cap limit. Right. I'm getting into the weeds here, but essentially it starts off with that free strategy session. And our conversations are always free. We don't charge for our counseling services. We basically provide this service at no cost. So the conversation is the same, just the plan is different because every individual is different. Their investment capital is different. Their income goal might be different. How are they targeting cash flow? Are they targeting equity growth, like appreciation? I mean, those are the variables, but the conversations are the same. So it doesn't really matter. Now, I don't know if I'm answering your question or not, but
no, you did. Because I think sometimes people, I remember I was teaching real estate investment workshops years ago when I owned the real estate companies, and I would leave thinking I did a really good job. I gave the basics, all that stuff, and the feedback I would get often is that people were like, well, I don't have $300,000 or $400,000 liquid to go invest. Yeah. And I was like, no, I blew it. You missed the point. You can start with because in our market we had, $100,000, $150,000 3-bedroom 2-bath homes that, you could get into with 25 to 40 grand and, get some good cash flow on. And I had created the perception that it was these people who all had $500,000 liquid cash that were investing in real estate. There are those out there, but a lot of them started with 1 or 2 properties they started to acquire. So if you're listening to this, my point in saying that, why I asked that question is, set a goal to have some liquid cash, and it doesn't have to be $100,000. You can, as Marco said, 20, 25,000 in some of these markets gets you in the door and gets you starting to create cash flow. And as you create more cash flow, you create velocity behind your investment, which turns into 1 to 2 to 4, et cetera, to do that. So the goal is to start. So I love it. I'm going to get on a call with you guys because we're in a position to get some more real estate. So that's why I'm excited. I was excited for this podcast.
If I could just quickly say, to give some people context, because some people are still thinking, this might not be something that works for me or I can afford. Just to say it real quick, Cass, the range of property values for single-family detached homes that most investors invest in, like regardless of whether they're working with us or we talked to them, generally speaking, ranges from about $80,000 on the low end to $180,000 on the high end. That's kind of the range. For someone living on the coast like California, they might think, well, what is that, a garage? Because here the houses are like $700,000, $800,000. The reality is that in the Southeast, the Midwest, places that we operate in, a typical home, the median price is about $180,000 to $250,000. So when you're in a B-class neighborhood, you're probably in a $130,000, $140,000 home. So the range is from 80 to 180. The numbers make great sense in terms of the price to the rent ratio, and I mean, not talking about duplexes or fourplexes, but that's the range. So people thinking, oh man, I need a lot of money. No, 20% of $100,000 property is $20,000 plus your closing costs and reserves. $25K gets you started or gets you that next property. So that's the math. Yeah.
Man, good stuff. And guys, as we talk about in a lot of stuff that we do with Cash Flow Mastery course, Sales and Profit Summit that we talk about, when we've had our guys from Cash Flow Tactics on several podcasts, all of them are talking about, raising the income that you create, managing that properly, and multiplying that by investing in other businesses or real estate. If you have questions and want to get started, as Marco said, reach out to them at NoradaRealEstate.com, excuse me. It's right in front of me and I couldn't read it.
Yeah.
I'll put it in the notes. How about that? And then PassiveRealEstateInvesting.com. and get the education, reach out, schedule that consulting call to find out how to get started. Man, always a pleasure. Time goes so fast, and I even went over my allotted time that I asked for. So thank you for participating today. Any last advice or words you want to leave our listeners?
No, I just, first of all, I want to thank you, Chess. It's been, a pleasure, a real pleasure, and talking to you and your audience. No, just take action. I mean, a lot of people just think about this, talk about it, and hear about it, but they don't actually do it. So for those people who are sitting on the fence, seriously, just, if you're not today, when? Ask yourself, if not today, when?
That's exactly right. If not today, if not now, when are you going to do it? When are you going to take action? Today's the day to at least take that first step. Visit their website, reach out, make a connection, and start that conversation that moves you into that productivity. Marco, as always, thank you again for coming back on Connect, Share, Prosper. Guys, every Monday, noon Central, I bring you successful entrepreneurs that bring their wisdom and advice on how to help you make more money, manage that money, multiply it, how to build connection and share and prosper so that you can have a legacy far beyond the business that you've generated today. So again, guys, remember, every Monday, noon Central, join us on the Master Networks page for great guests like Marco. We'll see you next time, guys. Be well.